Welcome back. Today is July 5th, and on the screen here you can see I am up $69,000 for the last 30 days. Nice. Um, yeah, I mean it's been a great a great week. Just last week on Friday when I made this video, I was at 47,000. Now we're at 106,000. So not bad at all. Today, shorter video. I just want to say three things. Let's see if I remember all three. The first is, when do you sell? The second is buying companies when they're not all hyped up. And the third is, I think I was going to talk about falling wedges again. So yeah. So let's start with when to sell. So back in 2020, when I started this like options trading thing, I remember I sold early because I needed the money, and also I was kind of scared that it would go away. If I had not sold, I would have probably doubled or even tripled what I had made. I didn't sell everything at once, but that was something that I learned, where it's good not to be greedy, but also sometimes you just have to stick with the plan. So when I started the series, I had the spreadsheet, let's pull that up, about what is my stock price target and like what is the strategy to begin with. And we're looking at a 2-year time interval. So it's only been like 2 months since I started this series. And my price target is still roughly 400 by 2025. So I'm not going to sell yet. There's a few other things I want to mention about that. But generally speaking, the saying is, let your winners ride. So I have a winner right now, which is Tesla, obviously. And I do think it'll probably go back down soon, but I think long term it's probably going to continue going back up. So we'll see. Maybe I'll regret that, but we'll see. Generally speaking, I'm pretty confident in that decision. Also, like, had I sold back in April, I would have probably been happy about that because then it went back down. But then theoretically, using that same mentality, I would have sold probably earlier this week and missed out on, give or take, 20, 30 grand. The second thing I want to mention is when to choose or when to buy a company's stock. So if you're hearing about a stock in the news, if you're hearing people say, oh my God, have you seen Tesla? Have you seen Nvidia? Have you seen GameStop? There's a good chance that you're already kind of late to the party. And so when it comes to when to buy a stock, I think personally, one of the best strategies is to do it when you don't hear about it. You try to find a company that has strong fundamentals, that is undergoing an overreaction from the market because of some near-term bad news. So with Tesla, it was the lawsuit, it was Elon buying Twitter, it was EVs going down in demand, and it was all this stuff. And finally, the lawsuit is almost over, not yet, but it looks like Tesla's going to win. EVs are still looking okay. Robo-taxis are on the horizon. And I think somebody got squeezed, probably a short squeeze this past few weeks. So maybe somebody covered, I don't know. But same thing with GameStop. When GameStop, nobody's talking about it. If you remember in the very first episode, I had a GameStop option that was just sitting there, just one. And then all of a sudden GameStop went super high, back down, up, back down. I'm still bullish on this company. And I bought 50 more shares. So that's when you choose when to buy, when to sell. The other thing is a falling wedge. So I'll say once again, a falling wedge is a bullish pattern. And so Tesla has a perfect falling wedge pattern. So if you Google falling wedge, this is what it looks like, where you have an upward movement in a stock. It stops and then it changes direction and it goes down. And it zigzags down, but it kind of starts to zigzag in a smaller and smaller channel. And then eventually it'll break. And once it breaks through this upper wedge resistance line, basically there's no way to know how far up it's going to go. So with Tesla, we have a almost perfect falling wedge pattern, except for this area right here. But if you, I guess, cut this out, you can see that we've bounced off of this blue line a lot and this upper blue line a lot too. And just this week, we rocketed straight through. So when I said back in early 2020, I sold too early, that was in November. And I sold right around here most of my options, November 20th or November 30th. Had I kept it, we were at about 200 pre-split or post I guess post-split, it could have gone all the way up to about 300 just a couple months later, which is crazy. So once again, timing is everything, but also timing the market's kind of impossible. It's a bit of luck. We'll see what happens. I think Tesla's going to go down for maybe 2 or 3 weeks, and then it'll probably continue going up after that. So we'll see. They have earnings coming up soon, and then they have Robotaxi on August 8th. So yeah, that's pretty much it. Quick update for today. The thumbnail or the caption for this video will be 69,000 in a month, because that's a great title. And let's see, everything else is pretty much the same. Let's look at the fear and greed real quick. I think it's like mid 50s, which is okay. I kind of like that. If it's too fearful, it makes you worry that something's going to crash. And if it's too greedy, it makes you worry that something's going to crash because people are being too greedy. But when it's neutral, it's kind of like, okay, fair enough. Nothing to think about. I think I'll say I'm like slightly higher, maybe just kind of arbitrarily higher. Nothing noteworthy there. So yeah, I'll wrap up the video and I'll talk to you next week. Thanks, bye. Feel free to subscribe to stay tuned for future video tutorials that I'll be releasing soon and to follow along with me on this journey. Follow me on YouTube, Instagram, and Twitter, or X, or visit lifewell.co for more information about investing. And as always, I'll see you next time.